Okay, I think we're ready to begin. We have most of the people who registered on. I'd like to welcome all of you to SCORE Bucks County's PPP Loan Forgiveness webinar. My name is Linda Zangrilli, and I'm the chair of the chapter. And we are really excited that two of our members have stepped up to put this presentation together for mentors in the other chapters. This is one of the few, I think, webinars that I've been in where it's been a mentor only, a SCORE only. So we're happy to share what we found. And before we begin, I have a few housekeeping items to mention. First of all, we are recording, and everyone who registered will get a recording, a YouTube recording, a link for that, as well as the slides. Secondly, we are answering questions at the end. So if you have one, please put it in the Q&A at the bottom of your screen, and we will answer as many of them as time permits. So without further ado, let me present the two gentlemen from our chapter who have worked so hard to get this presentation together for you. First of all, Prayas Shah, who has been a small business owner for the last 18 years in Bucks County and a member of SCORE for the past year and a half. His experience in medical device design and manufacturing, as well as his knowledge of electrical and computer software engineering, has made him an excellent mentor for us, for our clients in Bucks County. And he's more than qualified to pull all this loan forgiveness stuff apart, and we're happy for that background as well. Our other presenter is Richard Kroger, who's our finance chair for the chapter. He has over 30 years experience in the banking and financial services industry with a specific focus on funding programs for businesses. His experience includes 10 years selling U.S. government guaranteed loans using those offered by the SBA and the USDA. So without further ado, I will turn the program over to Prayas.
Thanks, Linda. Hey, I just want to point out a couple of things. As Linda mentioned, that I am an engineer and Dick is an accountant, and I have lots of stories that I can tell about accountant and engineer working together. And I can tell you in this case, we have been able to find lots of interesting things that would make this presentation that would be very helpful in possibly saving some money for the clients. I am going to start out by thanking various folks. First of all, I'd like to thank you, the participant, to spend your time so that you can help others maximize the forgiveness amount. Next, I would like to thank Dick Kroger, my co-presenter. He has helped me quite a bit in terms of organizing the format of the presentation, as well as reviewing some of the crazy things that I created in a very complicated example and helped me simplify it. I would like to thank Charlie Morris, our technology expert and the webinar coordinator. We couldn't be saying this webinar without his help. I'd like to thank Al Cassidy. He is my mentor and teacher for making me the SCORE mentor. He is the chairman of the onboarding committee, I think. I'd like to thank Linda Zangrilli to give me opportunity to present, and also to Dave Foster for inspiring many of us, including me, for presenting something like this. I want to point attention to a couple things. You can easily see my cursor on your screen, and also on every slide, on the bottom of the slide, there is a slide number. So if you have any questions, and if it's specific to a certain slide, feel free to mention the slide number. And when you get the deck, you will have those numbers also to provide the reference for your Q&A after the webinar. And I would like to introduce you to Dick, and he can start out with some of the interesting disclaimer that we do have here. Dick, take it over.
Okay, thanks, Prayas. First of all, I'd also like to echo Reyes's comments as far as thanks to Linda and Charlie and to the people that have helped put this together, especially to my co-presenter, Reyes. You can see, first of all, the first of the disclaimers that what you're going to hear and see should be used for informational purposes and not considered in any way legal, business, or tax advice. You need to consult with your attorney, tax advisor regarding the information that will be contained in the presentation. The next part. Rules have been changing. One of the things that you'll notice in the slides that you're going to see is that they are multicolored. Part of the reason for that is because even up as late as yesterday afternoon and evening, we were making some changes, some additions to the information in the slides. And part of it is to highlight the importance of the information, but also is to reference the fact that this is an ongoing situation. It's a changing situation. In fact, I was just reading where someone was used a sports analogy to describe this, and some say that the 3P program is like going to a stadium where the teams are playing and the stadium is being built in progress. Finally, one of the main points that I've emphasized to people I've spoken to on the phone when they've posed questions to me about the program is that you need to talk to, if it's not something I can help with specifically, that they need to reference and contact their lender who is helping them with the program. They're the ones that are making the decisions about the information that's needed, and they are also the ones who are, you would hope, much more familiar with the information on a day-to-day basis. Okay. Topics for today, things you must do to get loan forgiveness. The definitions of terms that you'll see when we talk about them. Items that affect the total forgiveness of the loan. We have sample calculations, some basic sample calculations of forgiveness that you can use. Understanding the different items on the form and the documentation requirements. Continuing, as far as questions, what do I do if I haven't applied for enough, if the loan, I need more money? The changes that have been introduced by the Payroll Protection Flexibility Act. You'll see that abbreviation. I'll probably refer to it for simplicity as the 3PFA, and the deductibility of qualified expenses. Okay. This is in color to emphasize the importance of this. You must apply for the loan. It's not like the money's going to be coming down from out of the sky. The borrowers need to take the initiative and apply for the loan, and they need to do it quickly. If we were doing this in April, it would not be such a big deal, but we're doing it in the middle of June. And as you can see, people have up until the end of the month, right now, the next couple of weeks, to apply for the loan. You must also apply for forgiveness. There is a forgiveness form that needs to be completed and submitted to the lenders. You're not automatically, when you get the loan, you're not automatically going to get some of it forgiven. The onus is on the borrower to complete the forgiveness form, and the application and the forgiveness form must go first to the lender. They're the ones that are going to be reviewing the information that's coming from them, and then it goes to the SBA later. Here's the website to go to download documentation that you need. That's something you can basically use as a reference going forward. And especially now, it's even more important now since we're running out of time. You must start collecting that borrowers must start collecting the information now and getting it together to submit to their lenders to get the ball rolling. Okay, first, should things to do for qualify for loan forgiveness. You should apply for forgiveness as soon as the covered period, the abbreviations you'll see, the cover, CP is covered period, APCP is the alternative payroll covered period, which will be defined on one of the following slides. The borrower needs to understand that the lender can take up to 60 days to decide the forgiveness amount based on data they've supplied, and the SBA can take additional time before the funds are transferred to the bank. The second date where the repayment amount not forgiven is the most important. However, repayment can start as soon as the borrower and the lender decides to start to make repayments. The covered period, CP, the covered period is 8 weeks or 56 days from the day the loan's dispersed. That's under the old rules. The new rules from the Flexibility Act changed the time period to 24 weeks or up to December 31st of 2020, whichever is sooner. The alternative payroll period, the APCP, once again, 8 weeks or 56 days from the first day, 56 days from the first day of the new pay period after the loan is dispersed. FTEs, full-time equivalent employee, 40 hours work week or more equals the number 1. An FTE for a part-timer with less than 40 hours per week is calculated at 0.5, calculated as number of hours worked divided by 40, or for simplicity, you can make it 1/2 of 0.5 FTEs for each part-time employee. The CP, the covered period, 8 weeks or 56 days from the day of loan disbursement. That was under the old rules. The new rules, the 3PFA changed it to 24 weeks or up to December 31st, whichever is sooner. The APCP, once again, 8 weeks or 56 days from the first day of the new pay period after the loan is dispersed. Payroll frequency can be every 2 weeks or sooner. The FTEs, pardon me, full-time equivalent employee, 40 hours or more per week for equals 1 FTE, and for part-timers with less than 40 hours per week, you calculate it by the number of hours divided by 40, or 0.5 for each part-time employee. The reference period, RP, the 2 different periods are defined in the application. The borrower has the option of using either one that works to their advantage, but whichever method they use, it has to be used consistently throughout their calculations. Reference period, for purposes of this calculation, the payroll period is at the borrower's election, either February 15th, 2019 to June 30th, 2019, or that's number 1. Number 2, January 1st, 2020 to February 29th, 2020, or 3, in the case of seasonal employers, either of the preceding periods or the 12 consecutive 12-week period between May 1st, 2019 and September 15th, 2019. For each employee, follow the same method that was used to calculate the average FTE on the 3P schedule, a worksheet, and add across all employees during that period and to come up to the total. Definitions of key terms. Payroll costs include paid as well as incurred during the covered period or the alternative covered period. Payroll costs include salaries, wages, vacation, parental, family, medical, and sick leave, health benefits, state and local employer tax and salary. FICA taxes and federal and state withholding don't count as payroll costs. A couple of the webinars that I dialed into got questions regarding bonuses. And the answer from the people was that the bonuses paid as need to pass the, quote, smell test, unquote. As long as the dollar amount has been budgeted for and is paid within the covered period or the APC period, it should be considered an eligible expense. Examples that they use is if all of a sudden somebody decides to pay somebody $100,000 just for the sake of making the payment and pumping up their payroll costs, that probably, if they're questioned about it later, is probably going to be a problem. The forgivable non-payroll expenses, and these are expenses that have to be in place on or before February 15th of 2020. Mortgage interest, not including any principal and not including any prepayment or excess principal payments. Rent payments that are made as long as a written lease is in place before February 15th of 2020. And utility payments for gas, electric, water, sewer, telephone, internet, and gas expenses, transportation expenses for company vehicles. Forgiveness reduction factors, more abbreviations. The FTE reduction quotient, FRQ, the full-time employees during the covered period divided by the covered period, FTEs during the period. There will be slides coming later that talk about the reduction to the, for safe harbor provisions. Payroll reduction amount, PRA, if more than 25% reduction in hourly or in salary or hourly rate. Once again, covered by later in the safe harbor provisions. The adjusted payroll cost is payroll cost minus payroll reduction amount times the FTE reduction quotient. Maximum allowable forgiveness. The new rule now is 60%, 40%, with 60% applying specifically to the payroll cost. Previously, for those of you that are familiar with the program, it was 75. It was the 75-25 rule. Owner, employee, or self-employed individual's payroll cost. Here, the amount must not exceed 8 weeks worth of 2019 compensation for any owner, employee, or self-employed individual or general partner, and at a dollar amount of $15,385 per individual. That number comes from taking the 100,000 divided by 52 times 8 weeks. All right, here are the employees hiring safe harbors. Is excuse me, provide a safe harbor from reductions in loan forgiveness by reductions in full-time equivalent employees for borrowers who are unable to return to the same level of business activity the business was operating at before February 15th, 2020, due to compliance with regulations or guidance issued between March 1st, 2020 and December 31st, 2020 by HHS, the CDC, or OSHA, or worker or customer safety requirements related to COVID-19. Secondly, provide a safe harbor from reductions in loan forgiveness by reductions in full-time equivalent employees to provide for borrowers that are both unable to rehire individuals who were employees of the borrower on February 15th, 2020, and unable to hire similarly qualified employees for unfilled positions by December 31st, 2020. These two provisions kicked in primarily because of the extended unemployment benefits that were given, the extra $600 a week to employees, and the difficulties that employers were having in bringing those employees back to work. Okay, and Prayas, if you'd like to pick up from there, I'd appreciate it.
Okay, thanks, Dick. So we are going to go through what I would describe it as a simple example that would identify the CP and the APCP, and how does that impact on the loan forgiveness amount, as well as the FTE reduction and how that would be factored into it. Remember, the example that I have created is probably one of the most complex in terms of defining the pay periods. However, that gets the maximum amount of possible forgiveness. And your calculation will vary based on multiple things. First, when the loan was disbursed, because that is the first day for CP. Your payroll frequency, if you have a payroll frequency of twice every bi-weekly or weekly, then you can utilize the APCP. If your payroll frequency is longer than that, like if you are doing every 15 days or every month, then you cannot utilize the APCP. The other part is when does the payroll cycle start date is, and also when you distribute the paycheck. Because as far as these calculations are concerned, the date when you transfer the funds for either a direct deposit or when you give out the check, that is the day of the paycheck, that is the paycheck distribution day. So your payroll cycle may start on Monday, goes until Sunday, but you give out the check on the following Monday, then your payroll cycle goes from Monday through Sunday, and your distribution date is the following Monday. The reason all these things are very, very important is because you are allowed to take the payroll cost as whatever is actually paid as well as what is incurred during the periods. So with that in mind, let's look at some basic assumptions for the example that I have chosen. Let's say that the average monthly payroll cost on application was $40,000 when you applied for the PPP loan. And at that point, then the average biweekly pay period cost would be $40,000 times 12 months over 52 weeks. And this is a 2-week pay period, so it would be $18,462. Let's assume you have 8 FTEs in the reference period. Your monthly rent and utility expenses are about $15,000. Now, going back to the $40,000 amount, your the loan amount would have been 2.5 times the $40,000 or $100,000. Let's assume that the loan was received on April 23rd, and your payroll is on a biweekly basis, and you do it on April 27th on Monday for the period April 13th through April 26th. So your next payroll bi-weekly, your next pay period beginning is on April 27th. You got the money on 23rd, your payroll period starts at 27th. And the reason is this allows you to utilize an alternative period for the payroll calculation, APCP, starting from April 27th. Let's see what are the implications of some of these things. So your cover period is 8 weeks from the loan disbursement, and it starts from April 23rd and goes up to June 17th. We'll look at the calendar in a minute to make sure that we understand how these 8 weeks were calculated starting from April 23rd. The other period is now starts from 27 and it goes up to June 21st. Again, we will look at the calendar real quick to see that. Among all these things, you have to be sure that when you calculate owner-employee or self-employed individual, you cannot add more than 8 weeks worth of total payment for the owner-employee or the self-employed individuals. And using different periods and when the loan was given to you, what your starting date is, your CP or APCP can actually give you more than 8 weeks worth of coverage for the payroll costs. And that may be very useful to those who have had layoffs and they do not want to or cannot afford to restore and then the loan amount reduction would not be as significantly penalized. So let's first look at the calendar, going from April 23rd to June 17th. So if you were given loan on 23rd, your 8-week starts from there. So the first week ends on 29th, on Wednesday, the second week, 3rd, 4th, 5, 6, 7, and 8. So it would end on June 17th, as we said before, 23rd to 17th. The alternate period, because we want to start from April 27th, that would go, that is the paycheck date, 1. This is the second paycheck date, 3rd one, and the 4th one. The 22nd would not count because it happens to be outside of the APCP. However, your days goes from 27 up to 21st, as we said before, 27 to June 21st. So assuming that the number of employees remained the same and there was no change in salary or number of hours worked, your payroll costs for this example would be for payroll that happened between the date of 23rd and 17th, and until 8th, and then you have 1, 2, 3, 4, 5, 6, 7, 8 days that you haven't paid, but it is the incurred cost. So going back here, 4 payrolls that happened on 27, 11, 25, and 6, that is actually paid, and up to the 6/22nd would not count, June 22nd would not count, but you have 8 days out of 10 incurred costs, and that becomes your actual payroll cost of 88,618. It's definitely more than the 8 weeks those were intended, but that's how the calculation can be done. So based on that, your potential forgiveness allowance would have been at a 75% rule, 118,000. On a new rule, it could be as much as 147,000. If you do the similar calculation for the APCP, the story is a little bit different. Same way, the 4 pay period, but now you have a 10 days of incurred payroll. So that's almost like 10 weeks of total payroll cost that you can use as a base payroll cost, and then the numbers fall out from there. Now, why is it that important that you try to maximize as much as the payroll cost here? And there are 2 reasons. One is if you have a reduction in FTEs. Let's say instead of 8, you have only 6. Then the actual payroll forgiveness or the payroll cost that would be utilized for calculating the forgiveness would be only 75% of the numbers that you use, 6/8 or 0.75. The other thing is if you have had some reductions in the payroll, if they were less than 25%, they do not affect the calculation. So like if you went from 5 days a week to 4 days work week and paid employees only for 4 days, it does not affect your forgiveness by reducing the amount. However, remember that because you're paying them only for 4 days, you are not having as much of a payroll cost to begin with. But at least it does not penalize you. In the event you do a more than 25% reduction or in the salary or the hourly rate, then that would also come off of what your actual payroll cost is. From there, that would be subtracted, then the FT reduction would be applied, and that would be utilized for either 75% or 60% rule. One more time, depending on the starting period, when it starts, the 8 weeks for that, for the APCP, the first day of the payroll period, and it is very likely that these things would change and it would allow you to go up to June 30th. The new information or the new form is not available yet, to the best of my knowledge. So with these things in mind, other things that must be kept into consideration is, if you remember, there was a reference period to calculate your FTE. There are some other periods or other locations where the form would ask for utilizing the CP or the coverage period. And there you cannot use APCP. The APCP is utilized only for calculating the payroll cost. Everywhere else, it is the cover period or the 8 weeks from the starting of the loan that has to be calculated. Several things that we already know is the $100,000 limit. If you are paying somebody $100,000 or more, including yourself, that gets capped at 100 as if it was only 100,000, and that is where you proportionally factor how much was paid during those 8 weeks. For the calculation of reduction amount, the reference period or the base period is different, January 1st through March 31st. And if you had a reduction of more than 25%, that's what would factor into the calculation of the forgiveness. Average FTE, as Dick mentioned before, you can calculate those as average full-time equivalency is not 30 hours or 32 hours as a full-time. It is 40 hours for this application calculation. And if somebody runs overtime, you do not get more than one employee for that. And depending on how many part-time employees do you have and whether they work for the whole week or like 20 hours, 25 hours, or a lot of employees who come only 1 day a week or 2 day a week, it may be beneficial to utilize 0.5 for those. And again, you have to make sure whichever one works for you, but it has to be utilized consistently everywhere in your calculations. The Schedule C filer, I think there was a question on this one, that you can take less than $100,000 or the net income that was reported on 2019 Schedule C as your payroll cost. You multiply that by 8 and divide by 52, and that's where the number 15,385 comes in. And based on the 75% rule, you would have never gotten 100% forgiveness, because this is, you got a loan that was 2.5 times the monthly payroll, and this one takes you only 8 weeks out of 52, which is less than 2 months. And it comes very close to, like, you can get maximum of 97 or 98% forgiveness. However, it may not apply anymore because now it has changed to 60% rule. For those who are getting a Schedule K1 and are not taking a W-2, those type of owner, you take the K1 distribution amount 0.925 and then do multiply by 8 and divide by 52. That amount in 14 cannot exceed $100,000, but in a long story short, the amount would be reduced by 7.5% because of the FICA tax. If you are filing as a subchapter S and taking a W-2 salary also, then you can take lesser of your salary, but you cannot add your K1 distribution, and make sure that it is only for 8 weeks. Even if you can utilize the APCP or even the regular coverage period gives you more than 8 weeks worth of coverage for the other employees. For the owner employee, you can do only 8 weeks. And you can definitely take the rent, mortgage, interest, and utilities. The important things about those aspects are as follows. If you have a lease in effect before February 15, 2020, that lease doesn't have to be just for your building, because the form explicitly states that for the property, for the business that you use. So if you have other equipment in the business, lease payment for that can also count towards qualified expenses. The utilities is a very interesting one. And when we see the form, you would see the definition that you can take not only just the water and sewer and electricity and heating, you also can take the telephone, the cell phone, the internet, and transportation. So if you have a truck that is leased by the business, that cost is into this additional allowed cost. So that could be very useful when you go to 60/40 rules, because now you can have additional expenses for the qualification towards the forgiveness. There are two links in the deck. One is, again, similar to the one before, that you can download the form, and this link points to the May 20th form that was on the, May 2020 form, and this is going to change. The next link is just for my purpose because I have highlighted some of the sections of the form as we review it together. But that link will not work for you when you have the deck. You try to click on it, it would not be a working link. So it goes something like this. This is the forgiveness application that you have to fill it out as a borrower, and you have to submit this to your bank, not to SBA. Bank would ask for some additional documentation also, and that we would go through it. It is a long form because it is filled with instructions on how to utilize the different sections and such. And we would go through some of those. But in general, what you would want to do is go towards kind of the bottom of the form. There is a Schedule A, which is mandatory to supply with the form to the bank. And then there is a worksheet that you use to fill out information into the Schedule A. You utilize information from Schedule A into the real application above that. However, they're given in the opposite order. So there are some of the definitions for the terms, those are used, and they are fairly straightforward to follow. Here is the definition of the covered period and the alternate covered period. And clearly it states that where the borrowers must apply the covered period, wherever there is a reference in this application, use only the covered period, not the alternative payroll covered period or APCP as we calculated. I don't think we have any clients who would have a more than $2 million loan, so we would skip that. And then here are some of the items that I already described, but there is one that says $100,000 must not exceed that. And these are the mortgage obligation, which says do not include any prepayment or payment of the principal. And this is on real or personal property. So as I said, if there are equipment that you have in the business, the lease on that can also go towards that. All those leases have to be before February 15th. The covered utility payment include electric, gas, water, and also transportation, telephone, and internet access. And normally we would not have thought of some of those things, but that would help in building up the amount that can be forgiven for some. The form does ask for if you receive the idle advance amount. A lot of clients would have received like $1,000 per employee as an idle loan advance, and it is asking for that. There was a time when it was very clear that PPP program and the advance would work in the following way. If you had received the idle advance amount, you would have to pay it back if you qualify for PPP loan forgiveness. 2 days ago, I have learned that that is not true. The advance would be considered as a grant even if you got the idle advance, PPP loan, as well as any additional idle loans. Again, the payroll schedule, you have to choose whatever your correct payroll period is. Only for the weekly and bi-weekly, you can take the APCP twice a month, monthly, or any other. You would not be able to do that. You identify what your cover period is based on your selection on the form. And if the APCP is applicable, you would put that one down. Business rent or lease payment, utility payments. And when you add all those expenses and that 1, 2, 3, and 4, those would be the total amount that potentially get qualified for the forgiveness. From there, you would subtract the amount that you utilize for the reduction more than 25%, and that is calculated on Schedule A and worksheet further down. Once you subtract that amount, then you calculate your quotient for the FTE reduction, if you had FTE reduction, and that's calculated here. And then whatever is the amount left, either that amount, the PPP loan amount, and you also want to see what your payroll cost is in line 1, divide by 75%, or actually now the 60%. Out of these 3 lines, whatever is the smallest amount, that is going to be your forgiveness amount. So that is where it is important to note that if you had either this or the other items, having the larger amount as your payroll cost helps you minimize the amount that you would have to pay back. And for the owner employee, it must not exceed 8 weeks of compensation for owner employee or the self-employed. And again, that is capped at $15,385 or $100,000. And remember one thing, when you fill out this form, make sure you do not do things they are inconsistent with what you had originally applied to the lender for. Because lender has, as well as SBA has, number of FTE based on which the idle loan advance was paid to you. On the loan application, you had identified what FTE you had and what the payroll was and provided details of it. So trying to say that, okay, this is a new application, remember you don't make inconsistent entries into this form. And one more time, the enter amount paid to owners and employees cannot exceed that. And the other item is how to calculate the FTE, as Dick already mentioned before. And employer contribution for employee health insurance are considered your payroll cost. Employer contribution to employee retirement plans are considered your payroll cost. And any taxes that you pay, state or local taxes assessed on employee compensation, that is the borrower or the business responsibility, employer's responsibility, they are also your employer costs. So the payment that you make for Pennsylvania unemployment compensation, that is added to your payroll cost. The FICA that you pay, that is not your your payroll cost. Also, the withholding of the state and local taxes from your employee and subsequently that you pay, that is also not your payroll cost. That can be utilized for adding up all the payroll costs. And again, there are references to the cover period in various places in the form, and I didn't highlight all of them for discussion. And here is the calculation, again, how the FTE is calculated. There are a couple interesting safe harbor. One was if you can prove that your business condition did not restore to the levels those were before, and that is why you don't have it. And there is a lot more clarification needed on that. That is going to be coming in soon. Also, there are a few other things that happened with the Flexibility Act, and we would see those in a minute. And these are the reduction exceptions or the safe harbor, as Dick already mentioned. Those are given into the form, so you can definitely see those things when you download the form. And as I said, that all the information that you need to fill in different lines, they are coming from the worksheet here. And this worksheet would feed the information onto the Schedule A, and then Schedule A would fill the information onto the main form. Here is a list of documents that each borrower must submit with the PPP loan and what they should retain. I'll go through them while we're looking at the form and would summarize it again. You have to provide the payroll information on Schedule A that is required, that you have to file with the form, the non-payroll information that you have to provide, and if you pay close attention, the lease payments, and then you need the lease agreement in existence. It has to be before February 2020, and you have to either provide a receipt or the canceled checks verifying that the payments were done in the covered period. So if you didn't pay rent, but if you want to say that, okay, I'm still going to deduct that, in some cases that may be questioned if it is not paid within a reasonable time frame. And same for the utility payment. This is a list of documents that each borrower must maintain, but they are not required to submit. And the list includes all the support documents that you have fundamentally. And remember that SBA has up to 6 years to question any application that they had. And that's why you had to retain them for 6 years after the date the loan forgiven or is repaid in full. So it can take up to 8 years. If you have to pay part of the loan and you take 2 years to do it, it would be the total of 8 years that you must retain the document. Then there is an optional information that they ask for. Again, it is optional. It is up to the user's discretion to say if I want to provide that information or not. So much about the application form. And again, this is a summary of what documents you must retain for 6 years. And as I said, 6 years can turn into 8 years. In terms of some of the dates that now the Flexibility Act allows you to have your period covered up to December or 6 months from the day you have received the loan. So December 31st is not for everybody. It is 6 months from the date of disbursement. And then you apply for that, and then your bank has some more time to review it and approve the forgiveness. And all these things matter in some very twisted ways. But getting back to the document that you have to retain, so if you use any of the safe harbor, you should retain the documentation for it. Like if you offer a job to an employee and they decide not to accept it, if somebody resigned because they no longer feel comfortable coming to work, if there was any written request by an employee who says, oh, I don't want to come for the next 4 weeks because we are in yellow zone or green zone, but I'm uncomfortable coming and getting in touch with people, you have to have documentation if you're going to utilize a safe harbor to say, hey, employee said no, and that's why I am not reducing my FTE count, even if I did not pay them. Remember, if you didn't pay them, your overall payroll cost would be less anyway, but at least you won't be penalized for not having the same number of FTEs. Borrower must retain all such documentation on file for 6 years, just copied from the form for a reinforcement. And as I mentioned, that idle loan advance most likely does not need to be paid back according to Jim Verbeek at SBA. And it is a little bit different than what original PPP loan document was, but if that is the way, it is more money for people to keep in the pocket. Remember, the term is 2 years for the PPP loan at 1% interest rate. The first payment will be due after 6 months from the days of disbursement. However, the 2-year term does not start from there. So in that case, it would be only 18 months. There are some talks to extend everybody's term to 5 years, and there are some issues with it because you sign a promissory note for 2 years. And what do you do with that note? How the terms change? Should the interest change? Because it is in bank's best interest to say, collect it for 2 years, and then we'll find a way to give you some more money in some different way. But that needs to be worked out between banks, the SBA, and the Treasury Department. So there were a couple of questions that had come up prior to us preparing for this presentation. One was to say, I have a client whose payroll agency did not provide the correct amount. And if you had a mistake on the amount of the payroll cost, and because of that you did not apply for enough loan, you can still correct the application. I have talked to TD Bank and they do take the corrected application, provided that you can document the corrected information or the cause of the error. However, remember that 2.5 times is the maximum amount that you can apply for. So if you think that 60/40 change, and that's why, because I have larger rents and such, so I would qualify for a larger loan, it doesn't really work that way. It is a 2.5 times the average monthly payroll. That is still the maximum amount that it has to be. The key change is introduced by the Flexibility Act, the 60% minimum towards payroll instead of 75%. This would help a lot of businesses because if they had a larger rent but not as many employee costs, they can potentially benefit. Optionally allows 8 weeks of cover period extension to 24 weeks. I haven't seen any actual calculation document or further guidance on it, but that is possible. The FTE safe harbors have been expanded so that before you could restore the employment to the level of beginning of or of the reference period by June 30th. And now it is extended up to the December 31st. Remember, it can also potentially hurt, and in the following way. Suppose in your cover period of 8 weeks or by June 30th, you have so many employees and you think that the business is going to pick up, but if you wait until December 31st and you cannot restore them, then your calculation would be based on average FTE during the period, and it may be beneficiary to take this 8 week and follow that. The other thing is you have a choice to choose the existing form or the current 8 week period for calculation and apply for forgiveness right now. Technically, banks are supposed to start accepting forgiveness application starting week 7. I do not know of any who is accepting that. When I check with TD Bank, that's our bank, they mentioned that they're waiting for further guidance of PPPFA, the Flexibility Act, before they would start taking those applications. The way the Flexibility Act was written, there was no partial forgiveness if the 60% of the loan was not spent on payroll during the cover period. It is very, very likely that the partial forgiveness will be back as it was in the original rules. The other changes by the Flexibility Act, it does allow the look-back period for the criminal records. So if somebody had a criminal record and they could not, within last 5 years, and they couldn't apply for the PPP loan, now it has been reduced to 1 year from 5 years. And to the best of my knowledge, I think ACLU is filing a lawsuit against SBA to say there shouldn't be any period like that, that they should be allowed to file for the PPP loan right away. At least the Flexibility Act has reduced it to 1 year. This was one of the biggest things, that if they cannot find a qualified replacement of the employee or cannot restore to their business to the economic status as of February 15th, if that was the case, then the FTE reduction would not work against them based on this new safe harbor expansion. About the deductibility of the qualifying expense. Remember, when the IRS rule says that if your loan is forgiven, then you cannot deduct the expenses. Those are utilized as a condition for the loan forgiveness. And Flexibility Act has not changed the deductibility of the qualifying expenses. And one of the complicated way of looking at it is, suppose you decide to wait until December. And you haven't figured out what your forgiveness is going to be, now you have to fill out your tax return because you fill out the forgiveness application and the bank takes it's up to 60 days to approve or disapprove that. And based on that, if you already had filed for your 2020 income tax return, you may have to correct that. So just keep in mind, there is a reason why we say that try to gather all the information as soon as possible and apply for forgiveness as soon as possible. Some additional help for your client. Dick has found a local nonprofit called Pennsylvania 30-Day Fund, and they are giving up to $3,000 loan that does not have to be repaid. And you can find out more information on it. And another thing I want to point out is the idle loan, including 10,000 advance grant, they are open again. Dick, do you want to say anything more about this program?
The only thing, the only thing I would add quickly about the 30-day fund program is one that apparently has been in existence for a while. The requirement, there's some pretty basic requirements. The business has to be for profit. The business has to employ between 3 to 30 people. The business needs to be based in Pennsylvania and have been operating for at least 1 year. And the business has to be owned and operated by a Pennsylvania resident. The dollar amount is small. The intention of the program is to provide some interim funding to people while they're waiting for the federal funding to come, either from the 3P program or from the EIDL program. As I said, and it seems to me, it seems like a pretty straightforward application that needs to be completed and submitted. And the one point I did want to mention about the 3P program, the intention behind the program is not to add another debt burden onto the businesses. That's one of the reasons why the rules and the requirements seem to be changing so often, is because situations come up that people become aware of and they say, oh, well, we didn't think about that. Well, they think about that and they try to cover that during what are called a new phraseology for me, interim final rules. And they're, depending on what publication you read or what source you have, there have been at least 17 interim final rules that have been issued since the 3P program started. And once again, it's because people find out that there's situations that come up that haven't been covered in the original document. One other thing, as an encouragement to people to continue to apply for the funding for the 3P program, there is still, as of this past weekend, $130 billion available. Now, which is obviously seems like a big number, and pardon the temporary interruption. Part of that is because of funding that's still available in the program, and also because of funding, people have repaid money that they have gotten from the 3P program, and some of you might have seen newspaper articles that have been published about that situation. But the intention or the need to continue to apply for financing is there, but the window is closing. So anyway, so that's all I wanted to mention about that.
So we can answer the questions that you have already, most of them, I think all of them. And if you still come across the questions, feel free to email them to Dick. He is very well versed with the changes and things, and he keeps on top of these things. You can also send the question to me, which I may just forward to him, but that is perfectly all right.
Yeah.
Linda, do you want to read question or do you want me to just read the questions? Those came in Q&A and go
Yes,
through
why don't you just read the questions and I can address the slides and the rest of that.
Okay, all right. Dick, do you want to do it or should I go through it?
You can do it.
Okay. So, how do single owner companies who base their PPP application on a prorated K1 return in lieu of salary? Again, you provide that as a part of your income tax return. As we discussed before, 0.925 of the salary or the box 14 and not to exceed the $100,000. I hope that answers the question properly. Can you use all the money for payroll and still be forgiven? Absolutely, you can do that. Can the slides be shared with clients? I would say, I would leave that for Linda to answer, but I think you can share it, provided you give them enough disclaimer to say this is information that is developing. And I would let Linda decide if this should be shared with clients or not, as well as the full recording of the webinar. Linda, what do you think?
Yes, well, we will be posting the video and the slides on our website under the Browse Library link. So you will have an opportunity. There'll also be the recording on YouTube, and you'll get a link to that after the seminar.
Okay,
And I would agree with you about sharing with clients that, you know, we've gone into a lot of detailed explanation about everything, but as all government things are changing rapidly, we have to be cautious in how we share this. So I would say the mentors need to understand what they're sharing and make sure that they use that caveat that the government changes things on the fly. So that would be my best advice for that.
Okay. Question, I think there's a beep coming through Zoom in the background. Can it be
Yeah,
silent?
I think that was from Dick's computer, but we can get past that one.
Okay. Yeah. On slide 11, did the SBA reduce the percentage of payroll that can be forgiven from 75% to 60%? I'm not sure what this question is trying to ask, whether it is asking to say that if your payroll was this much and it became only 60% towards the loan. Let me start again. If my payroll cost was this much, then you divide it by 0.6 to say what is the maximum forgivable instead of 0.75, which was the old rule, and that allowed for less of a forgiveness. I hope that answers the question.
I think that later on you clarified that in slide 31. The person who asked that question replied again and said he now gets it because you further clarified it.
Okay. All right, can the client change and pay weekly when they had been paying every 2 weeks during the 8 weeks? I think just changing it only for 8 weeks is perfectly all right, as long as you do what you paid and have documentation and that is properly maintained. If you did not change it from 2 weeks to once a month, then you can also consider utilizing the adjusted period too. Will we have access to the slides? Yes, you will. Did you say that the calculation in Schedule A will be changing soon? I believe so, because the Flexibility Act allows for different way, or like instead of 75%, only 60% and such. And if the SBA put a 616 version, then I missed that. My apologies. So that would be the new form. And
I think we answered the next one. So we go down to the trucking company. Can truck fuel be considered a utility?
In one of the webinars by an accounting firm, they had stated that it is the cost of utility, but I am not absolutely certain. The lease and rental can be considered as rent.
Yes, there's nothing that's specific. There's nothing that specifically covers that. I understand what Preyas is saying, and it might have been from the same webinar, that, but the example that they used were company vehicles. The expense of the company vehicles would be considered deductible or includable. But there hasn't been anything definitive. That was more or less the CPA's opinion.
Okay, I think that's the
There was
last question.
there was another one that came in through the chat. Are there special forgiveness rules for direct COVID-related expenses that needed to be implemented during the pandemic, such as training materials, et cetera, et cetera?
Not that I'm aware of. I don't think that they've gone that far as defining, those type of expenses as being eligible.
Okay.
But in a wrong way, if you were doing it to the training as on a paid time, then that expense is already covered. If you paid the employees for the training period that they were attending, then that is your payroll cost.
Oh, if it's included in as a payroll cost, yes. I thought they were referencing costs outside of payroll costs.
They would not be towards the loan forgiveness, but there would be a business expense that they can deduct on their income tax return.
Oh, yeah, it would be deductible as a business expense, yes. Or should be.
Okay, there's another one. Is there a forgiveness calculator somewhere to allow a quick way to run different scenarios and understand the process better to maximize forgiveness?
There are several calculators online. All you have to do is just go in Google and search for forgiveness calculators. And they would not necessarily give you all the items, but they would say, enter this amount, enter that amount. You have to figure out what are the qualifying amount yourself. But once you know it, then it would give you the amounts. Following the form is not as complicated as I described it, because a lot of people have just simple thing. Did I have enough full-time equivalent employees or not? Did I cut more than 25% or not? And if that happened, you have to go in details to figure out exactly what it is, because your bank will require that. And it is best to have that information ready and then have somebody else, including your accountant or some counselor, look at it and make sure that that is accurate before you submit to bank.
Okay, very good. Okay, well, thank you, gentlemen, for your deep dive into this really complex topic. I know that you've helped our mentors answer a lot of questions, and I know that the slides that they'll see after the fact will help a little further. So I'd like to thank both of you publicly for doing this. Thank all of you for attending our SCORE Bucks County webinar. And with that, we are signing off. Don't forget, if you have additional questions, you see that Dick and Preyas's emails are on the screen, so they'd be happy to answer any follow-up questions. Once again, thank you, and that's it for now.
Thank you.
Thank you.